Hey, Money Masters. Hope you guys are doing well. And welcome to those who may be watching on YouTube. Our Money Masters are women in my Facebook group, Money Mastery for Her. If you want to go and search in Facebook, if you're on Facebook, you can find us by doing a search Money Mastery, the number four, her. But we are on a mission, and that mission is to change the face of wealth. When people ask the question, name some people who are wealthy, I want people to be able to name off right off the rip, like at least 10, 15, 20, 25 women of color, right, who are wealthy. And so that's what we're about. So if you're a woman of color who is really wanting to make sure that she has her finances together, and not only does she have her finances together, but she's on track to be financially independent. And not only is she on track to be financially independent, but she is also on track to leave a legacy of wealth, then we welcome you. All right. And so for those of you who are watching live, hey, let us know who you are, where you're watching from. And today we're going to be talking about market fluctuation. We're going to be talking about market fluctuation, which is so apropos, right? With everything going on in the market on today. So, exactly what is market fluctuation? Well, we're going to get into that right after our crazy money story for today. So, listen, our crazy money story for today, and actually, it's actually, I don't know if you want to call it's not really crazy. I wanted to share like a windfall story today. And the reason that I want to do that is because sometimes some of us come into some windfall monies, right? And we don't necessarily know what we should do with those funds. My hope is that you would first contact your financial coach or your advisor and have a conversation with them, and also be very clear on your financial goals, right? So you have to have your financial goals written out and know what they are before you run into some windfall money and be able to spend it accordingly, right? Because if you come into windfall money and you have no idea what your financial goals are, guess what? You are going to lose a lot of that money, which a lot of people have over time, right? People who have won the lottery, who have gotten inheritances, people who have gotten huge bonuses on the job or won court cases or something like that. Many people have lost the money because they did not, number one, have financial goals. Number two, they didn't have a plan for that money, right? So have a plan, know your goals, have a plan before that money gets here. Anyway, here's the story. Okay. So there was a gentleman who was on the game who wants to be a millionaire, who wants to be a millionaire. Okay. And it's a true story. He's the executive of a company called Trivia NYC in New York City. So Trivia NYC, which is crazy when you listen to this story. But anyway, so true story. He won on How to Be a Millionaire, or Who Wants to Be a Millionaire, $250,000. Okay. Now, let me tell you how he got on the show. He got on the show. He actually went to Who Wants to Be a Millionaire the first time because he was just kind of a support for another person that he knew that was going on the show, and they wanted him to go with him. And so he got to see kind of behind the scenes and, everything that goes on. And I somehow in conversation with producers and things like that, they were like, you need to be on the show. So the person that he went with was on the show and did win some money. 18 months later, they called him to be on the show. So guess what he did? He went to go be on the show. So he got on the show. And crazy thing is, like prior to all of this, right? He was very into trivia. Okay, I think he had gone on Jeopardy. He had won on Jeopardy a little bit of money, and like I said, he started this company before he even went on Who Wants to Be a Millionaire. He started this trivia company. Okay, Trivia New York City. So now he's on the show. He wins $250,000, and so now the question is, what is he going to do with this money, right? What is he going to do with this money? Well, I'll tell you what he did with that money. What he did was he took that money and he opened a retirement account. Okay, these are the first things that he did. He took that money, he opened a retirement account, and then he invested the rest of the money. Okay. Um, Let me see. I believe his name was Ken Jennings. Yes, if you ever want to look him up. Okay. No. Ken Jennings was the buddy that I'm sorry. Ken Jennings was the buddy that he went with to give support to on that first when he went to the studio for Who Wants to Be a Millionaire. And Ken Jennings was a guy who won a lot of games on Jeopardy. He may have been the longest standing person on Jeopardy. Anyway, not Ken Jennings, not him. Okay, but this was the guy who was his friend. But anyhow, he got on the show. He won 250,000. He said it was the single biggest payday of his life, right? And so his wife, his friends, they all took the train back to New York, got out at Grand Central Station, went to a martini bar, and they celebrated some, right? So now, next day or, later week, whatever, the producers mail him a check. Okay. Got it via regular mail, had his name on it. Check says Tony Hightower is his name, $250,000. Okay. So his question, he said, what do I do with this? He took it to the bank. He said the teller even freaked out because this was the biggest check that the teller had even seen. And she said that, he mentioned to her that he wanted, by answering about 12 trivia questions. And I did the math. Okay. 12 trivia questions. That's $28,300 per question because I'm just a nerd like that. Right. So, anyway, he has to decide what he's doing with the money. So this is what he decided to do with the money. He decided to open a retirement account, as I mentioned, and then he also decided to invest. Now, what did he invest in? Okay. He invested in his business. So he said he hired a couple of team members. Okay. And it was probably the best thing that he had ever done. He hired a couple of team members, invested, and again invested the rest of that like into his business. So it was the best he's ever done. The trivia company is bigger than it's ever been, he says, doing more business than they ever have. And he just, he says now he can finally, now this is way after the 250,000, right? But he's saying he's now just getting to a place where he can feel like the days of struggling are not over. And, that he has some padding and that he has some cushion, and he doesn't feel like he's like 2 bad weeks away from sleeping in a cardboard box. These were his words, right? So I thought I'd share that story with you because again, sometimes we have, we come into windfall money. And honestly, for some of us have come into windfall money more than once in our lives, but we have nothing to show for it. And this gentleman did two things. He opened his retirement account, okay, to make sure that his future self would be okay. And then he invested in his business. So, what's the lesson here? We need to be investing in things that are going to give us a return. We need to be making sure that our money is working for us, right? All right. We don't need to be taking our monies and burying it in a hole like the parable of the talents. So, those of you who are new to following me, you know that I teach from a faith-based perspective, from biblical principles. And so the parable of the talents, the person with the one talent went and buried it. And so burying it and putting it in a hole can mean a lot of different things. In this instance, meaning that, money's wasted, is that we didn't allow it to produce more money. It just went down a hole. Okay. So when you get windfall money, don't let it go down a hole. Allow it to make more money, right? Be a producer. All right. So now let us now get into our topic for today, which is market fluctuation. So, what is market fluctuation? Quite simply, market fluctuation is the ups and downs of the market. Okay. So, we're in a season right now where the market is doing a lot of down, right? It's doing some ups, but a lot more downs right now. And so, most people who are investing don't really care for the fluctuation, right? Because it's nerve wracking. So, if you're going to open an investment and you're going to look at it every day, you probably give yourself a heart attack because the market is just up, down, up, down, up, down, up, down, day in, day out. Okay. And so that's what we call market fluctuation. So, what do we do to protect ourselves from market fluctuation? Because the truth of the matter is, you could take money, invest in one stock, okay, meaning I should say in one company, purchase however many stock from that company, but you're investing in one company. Well, if that company were to go belly up, then all your money will be gone. Okay. So, how do we protect ourselves from market fluctuation? Well, we protect ourselves from market fluctuation um, with diversification. Okay. So, that's one of the biggest um, things people, in the financial industry, advisors, all this will tell you, hey, diversify. Okay. That is the number one answer. So, how do you diversify? Well, there are a lot of different ways. So, in the type of fund that you invest in or stock that you invest in, actually could be a what we call a mutual fund. With a mutual fund, you're investing in more than one stock. You maybe have 30 stocks, you may have 100 stocks, but that fund is made up of many, many stocks so that if one company isn't doing so well, doesn't matter. The other companies are doing okay. If 5 companies aren't doing well, it's okay. The other companies are doing well. It kind of balances it out, right? Another way that you can diversify is what they call non-correlating assets. So this is number two, but it's just kind of a different way of diversifying. So non-correlating assets. What does that mean? Well, that means when the market is, I'm sorry, when non-correlating assets means that you have different types of stocks or different types of investments. So you got stocks, a non-correlating asset could be bonds. You got commodities, okay? You have currencies, you've got real estate. So these are all non-correlating assets, meaning that when one of them is not doing so well, probably the others are doing okay. So for example, the bond market has been getting beat up, right? But commodities are doing well. So probably like the natural resource funds, if you don't want to invest in one specific company, right? Because you don't want all of that risk, you don't want all the fluctuation, you could do a natural resource fund. And I just want to say here that I'm not making any recommendations. Okay. I do not know your personal situation or what's going on. So these are not recommendations. Okay, that's my disclaimer. All right, but I'm merely trying to point out that you can make sure that your portfolio is made up of non correlating assets. You've got some commodities, you've got some currencies, you've got some bonds, you've got some equities, you've got some real estate. Okay, so if you've got a good mixture of those things, that can help you with market fluctuation. Okay, we're in a period right now where the fluctuation is systemic, right? This is systematic risk. Okay, whereas unsystematic risk um, would be addressed by again just investing in a mutual fund. You know, that would be the help for unsystematic risk, meaning that it's not risk that's across the entire market. But right now we're in a period where we have risk across the entire market, okay, or a lot of the market. Just about everything out there is down, which could be a good thing if you are investing for the long term, okay? But if you're not investing for the long term, if you're investing for short term, whether you're going to retire in the next 3 to 5 years, or whether it's just short term investments, you put something in so that it could grow a little bit over 6 months, 1 year, whatever, 2 years, this is not a good time because we have systematic risk right now. And so investing in non-correlating assets um, helps with the systematic risk. Okay, so you got unsystematic risk, systematic risk. Unsystematic risk, just investing in mutual funds will address that. Systematic risk, you've got to have non-correlating assets. Okay, different asset classes in your portfolio: commodities, equities, bonds, um, real estate, those various different things, currencies, those various different things. Okay. All right. So if you have any questions, I'm not quite done yet, but if you have any questions, make sure that you drop them in the comments so that I can see them and address them. If you don't have any questions, that's great. It must mean I'm doing a good job of explaining. But if you have questions, just drop them there. And I want to say again, if you're watching the replay, let me know that you're here and let me know what you thought about this. Okay. All right. So lastly, what I want to discuss is how does this, um, how does this, what causes what we see now, this systematic risk that we're seeing now, or market fluctuation in general, right? What are the things that cause this? And listen, I'm not sure if I said this at the top. I think I did. I don't think I did. I'm not sure, right? I am Lexi Johnson. Okay, so thank you for taking time to view this. All right, so let's talk about that. What are some causes of this type of thing? Well, um, the major forces, okay, in the market, okay, and the fluctuation is one of the major forces is government. Okay, government holds quite a bit of influence over how the ups and downs of the market. Fiscal and monetary policies have a profound effect. So the Feds have lately been talking about increasing interest rates, right? And so that has had an effect on the market, and actually a negative effect on the market, right? People are like, they're pulling out, right? Because the Feds are simply threatening to um, the interest, increase the interest rates. Okay, so that has had an effect. Government spending can increase or contract the market, right? Raising or lowering taxes can also affect uh, what's going on in the market. Okay. So governments have a lot to do with what's going on in the market and the ups and downs of the market. All right, international transactions. Okay, so the flow of funds between countries, right, affects the strength of a particular country's economy and its currency. So the more money that's leaving the country, the weaker the country's economy and currency, right? Conversely, the more money that is coming into the country, the stronger the country's economy and currency. And so these things affect the ups and downs of the market. Okay. And then we could talk about another cause being speculation and expectation and all of these kinds of things. So people have different views about how the market is going to do, right? And so that affects what people do today, right? So you've got economists and all kinds of people, on the news or wherever saying, hey, we think the market is, going to be, is going to keep trending downward. We think the market is going to trend upward. We think, whatever they speculate, it's always called speculations because we don't know for sure, right? And then expectation. So the expectation of future action is dependent on what's currently going on, and it shapes both what's going on currently and what's going to happen in the future. So then you have what they call sentiment. All this is under speculation and expectation. So sentiment. And so basically, this is what the word means, right? How people feel about the economy affects the market. Okay. So people are listening to the news, and the news is talking about, oh, the market is down. Are we going to see a recession? Blah, blah, blah. So what do you think people are doing? They're taking their money out of the market, which is driving the prices down more. Okay. But based on feeling. Okay. So because people have a feeling about what's currently going on in the economy. Okay. All right. So those are just some things that can cause market fluctuation. Supply and demand of products or services or currencies. So as crazy as this sounds, I don't know if you all have been paying attention to the news, but the formula shortage, baby formula shortage, like all of these things have an effect on the market. And why? Because a lot of these companies that produce baby formula, they are publicly traded companies, right? And so their stock can go up or down depending upon supply and demand. So if the supply increases beyond the demand, the current demand, right, the prices are going to go down. But if there's a demand that's higher than the supply, okay, prices are going to rise. Okay. So likely that's what we're going to see and happen to see with the baby formula. Prices may rise because the demand is so high, but the supply is shrinking. Okay. In fact, as I understand it, I think our country has asked Europe to ship over baby formula, right, to help with our shortage. Okay. If supply is stable, um, prices can fluctuate high and low again as demand increases, right? So demand, low supply, you got high prices. You got more supply, lower demand. I should switch hands, I guess, right? You got lower prices. So all of these things, and if you think about it, everything that I've talked about, we've got all these things going on, right? Then throw in, this war in Ukraine. Then throw in, we're still dealing with a little bit of COVID. Then throw in just all kinds of stuff, right? So these are all things that can have an effect on how the market is doing. Okay. All right. Anyone have any questions before I get out of here? All right. If no questions now, again, for those of you watching the replay, feel free to drop your questions in the chat. I will surely come around and answer them. But I hope that this has been helpful for you. This discussion on market fluctuation. And honestly, if you're in the market and you're investing for long term, then you need not be um, nervous about market fluctuation. You just need to make sure that you're, diversified in the ways that we talked about. But you need not be trying to pull your money out at this time because you're in for the long run. And actually, this is the market being down is good for you right now. We're going to talk about that on the next episode when I talk about when do you change your market strategy, right? When do we change market strategy? Do we change market strategy because we're hearing market is down, or when does it change, right? So we're going to be talking about that next time, and I hope that you all have enjoyed this. I have been Lexi Johnson, and we will see you next time on the next episode of The Wealth Seed. Bye.